503, 58,503. So with Bitcoin, I want to remind, we don't make profit based on pips because it moves really rapidly and spread quite wide. So we make a profit based on percentage-wise. So 0.1%, 0.2, 0.3, and so on. Okay, if you decide to follow this trade, so you already open position, and let's see and let's wait and see how far it will go down and how much profit we're going to make. Okay, I'll speak to you later. I'll inform you about our decisions and if any changes happened with Bitcoin. If you want to get a strategy, you can get it from our website, company.co.uk, or you can get on the ticker on the right red line on this YouTube streamer, and you can find out what indicators we use, how we trade, how to find the right broker, everything from the information published on our strategy. I'll speak to you later. Stay safe.
Climate change. And President Biden is close to his goal of delivering 100 million coronavirus vaccine shots in his first 100 days in office. It could happen today, more than a month ahead of time. The U.S. has reached a pace of 2.5 million vaccinations per day. And Fed Chairman Jerome Powell has made a clean break with the old Fed. Powell stressed that the central bank will not raise interest rates until the U.S. economy shows it has fully recovered. Powell abandoned a cardinal rule of monetary policy to preemptively strike against inflation. It's a significant shift. In Myanmar, the military regime has piled more charges on ousted leader Aung San Suu Kyi. She's now been charged with violating an anti-corruption law and could face 15 years in prison. Suu Kyi hasn't had access to lawyers since the military coup February the 1st. And Google's planning major investments in the U.S. The company says it will spend more than $7 billion and create at least 10,000 full-time jobs here this year. More than $1 billion will be spent in Google's home state of California. There also will be data center expansions in several other states. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds of the global economic recovery.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how I would think about the SEP.
Chairman Powell, Federal Reserve Chair himself, pushing back in a big way in the last 24 hours. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro from New York City this morning. Good morning. Here's your market. Your bond market looks like this on a 10-year Treasury, north of 170, a clean break a few hours ago. On a 10-year right now, up 8 basis points to 172.41. The highs of the session, 174. In the equity market, you can guess where stocks are, down 17 on the S&P and negative 0.4%. And on the NASDAQ, lower, much lower. So that's the story right now, Tom. Yields up, stocks down.
I want to emphasize the real yield as well. That big negative number becoming less big, negative 0.59%, and the 10-year real yield. That's an important statistic this morning. What is certain is, well, there are exogenous shocks. That's what happens when you speak with Mr. Stephanopoulos over at ABC. The president did that and made worldwide headlines about the leader of Russia. One of his advisors with the Secretary of State is Victoria Nuland. Victoria Nuland had a wake-up call yesterday. Jack Fitzpatrick briefs from Washington. Jack, Victoria Nuland, Amanda Sloat, and the rest of them, did they know this was coming, these comments of President Biden about Mr. Putin?
I gotta admit, I'm not sure how many people in the State Department knew that these comments were coming. It was pretty clear that Biden was looking to push back on Putin much more significantly than Trump did. So in a big picture sense, as significant as these comments were, it wasn't entirely shocking for him to take a much more aggressive stance on Putin.
One more question on this. We've got so many other topics to look at right now, Jack Fitzpatrick, and simply, do we expect more sanctions? What will be the action behind the words of the President of the United States?
They haven't detailed further sanctions, but the Biden administration has made it clear that a lot is on the table when it comes to Russia. So, that's also an area where there is often Republican support in Congress for taking a harder stance. So no news directly today on sanctions on Russia, but certainly something that is considered a possibility.
Jack, is this special treatment reserved just for the Russian leader, or is this a new standard of this administration that will spill over to what he thinks about the Chinese leader, the Crown Prince in Saudi Arabia as well?
Right. Well, obviously, a lot of people were disappointed with the response in terms of specific hard actions on Mohammed bin Salman. There is expected to at least be a conversation about human rights abuses in China. That's something the Biden officials have mentioned in broad terms in this upcoming China meeting, but they haven't laid out any specific concrete actions that they are going to take leading into this China meeting. So clearly there is at times some inconsistency, not only in the words Biden chooses to use about foreign leaders, but it's not always immediately tied to a follow-up statement saying, and here's what we're going to do about it.
Well, as far as the leader of Russia is concerned, the spokesperson for the Kremlin speaking right now on a conference call saying the killer comments from the President of the United States on the Russian leader are, quote, very bad, and that the President of the United States clearly does not want to develop relations. Talk to me about the relations that could develop in Alaska, what the objectives for this particular meeting are.
Sure. So the Chinese officials have tried to describe this as a high-level strategic meeting. It does seem like they'll come in with more asks, more requests than the U.S., which is focused on, they have said they'll at least touch on human rights abuses, but potentially not in a way that blows up the meeting. The question is, do the Chinese officials get this to be positive enough so that they get that second meeting in April that they've requested? Clearly, it's something where U.S. officials are going in expecting to have at least a slightly uncomfortable conversation, but the question is, to what extent?
Is it going to be slightly uncomfortable when it has to do with the economy, with trade, with tariffs, or slightly uncomfortable when it has to do with some of the geopolitical tensions in the South Sea? I'm thinking of Taiwan in particular, with one CFR report recently saying this is becoming the most dangerous flashpoint in the world for a possible war that involves the U.S. and China.
Probably based on Biden's actions so far, more in a geopolitical sense than an economic sense, considering we haven't gotten indication that he's looking to totally overhaul Trump's tariff policy toward China. He's been somewhat hands-off in the early days of his administration in that regard. But there's been a broad effort to sort of reset foreign policy in Asia. You saw with the meetings earlier this week to try to kind of take the old stance of maybe a little bit more tough talk toward adversaries and adversarial governance and reassure traditional allies. So clearly, in a geopolitical sense, China is not someone that Biden or Xi Jinping is not someone Biden wants to go out of his way to befriend. But we haven't seen indications that there's a huge economic reset just yet.
All right, well, tough talk doesn't necessarily mean anything, especially if you have companies in the U.S. pouring record amounts of money into China and expanding their operations there. Do you expect Biden to push back on that or talk with China at all about some of the investment in supply chains and infrastructure in the U.S. to counter that pull toward China?
Sure, that's not something where the Biden administration seems to have ignored those issues. I would not be surprised if it has come up. I do think it's notable that it hasn't been a sort of first 100 days priority to completely pull back from some Trump policies economically toward China. But when it comes to 5G development, that kind of thing, that's a bipartisan concern in Washington. I wouldn't be surprised if that came up, and it'll continue to be a concern with an eye on China going forward.
Hey, Jack, great to catch up. Jack Fitzpatrick there of Bloomberg Government. Lisa, your final point's an important one. Industrial policy, that's what this is going to come down to. Getting these companies to come home and set things up here in the United States can be costly. And industrial policy, subsidies, etc., that's going to be a big push, I think, in the next year.
And people are talking about possible tax cuts for companies that decide to bring some of their supply chains home. How do they do that at a time when they need to raise money? And how do they do that when they're trying to shift the focus to lower income Americans? I mean, John, a lot of these policies, you're trying to find a coherent message here. It's going to be a tough 2021.
It's difficult, but some elements of that America First push in the last 4 years, Tom, they haven't gone. They haven't left the White House. They're still there.
Oh, no, they're still there. There's no question about that. And, of course, you know the bipartisan nature of our tone on China. But, John, I see absolutely no evidence of the song and dance of bringing jobs back to America. This has been a 50-year, a generational trend that we've seen.
Yeah.
And, does it get worse? I don't know. But I just don't understand how you incentivize jobs back to America.
We will discuss the labour market with Adam Poston, the Peterson Institute president, and, of course, the big shift of the Federal Reserve in the last 12 months. That's coming up and more. With yields higher, 172 on 10s, equities lower, 39.45 on the S&P 500. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on television and radio alongside Tom Keene. Lisa Bravitz, I'm Jonathan Ferro. Here's the price action. Equity futures softer, lower. We head south on the S&P, down 0.4%. On the Nasdaq 100, down by 1 full percentage point. Tech down, banks up. And if you switch up the board, it's all about the bond market. It has been for the last month or so, the last several months. Here's the breakout in the 10-year this morning, up 8 basis points to 172. Your new post-pandemic high, 174. And Chairman Powell just gave the green light, validated a steeper curve. 2s10s, the widest we've seen, going all the way back to the summer of 2015. Your 2 years pinned, nicely anchored at around about 15 basis points. That's where the Fed wants to see it. No rate hikes going all the way out through 23. And at the long end, this is the green light for yields to go higher. We caught up with Jim Kerrin of Morgan Stanley just moments ago, who said there is still oxygen up here. So we have to talk about something else. Finish on this, the transatlantic divide that's emerging here. And if you want to push that through, this is how you capture that story in this market. This is the German 10-year versus the US 10-year. Big sell-off in 10-year rates this morning. What do you see in Germany? A very small one. And this spread gets wider, wider, wider. And now that spread, Tom, around about 200 basis points. But I kept saying this over the last couple of weeks. Look at how far that can go and what we saw back in 2018 at around about 280 basis points. So has this move only just gotten started?
And John, I would note, I noticed the first thing I looked at this morning is the Swiss 20-year as a euro proxy, and it's actually gone to a positive yield. We'll see a little bit of that with Europe way, way behind the accommodation of the moment. Right now, without question, our theoretical interview of the day, Adam Posen with us with the Peterson Institute. Just terrific analysis of the monetary theory behind all of these historic events. Adam, I want to take the alphabet soup of aggregate demand, aggregate supply, Hicksian ISLM analysis and throw it out the window. What is the theoretical book of Chairman Powell?
Theoretical book of Chairman Powell has actually been pretty honestly stated by him, Vice Chair Clarida, and others. First, you work on observables. You don't work on the stars like R star or pi star. Wait till you see things. Second, that means that you do reactive rather than preemptive policy. Third, you focus on unemployment, but not unemployment as measured by U3 or U6, by labor force participation, by what really constitutes full employment. And fourth, that you're assuming that expectations are well anchored, not forward-looking, they're not going to jump. You put those four things together, which he stated very clearly, and that gives you the strategy.
Adam Posen, what's so important here is the unknown and what the confidence of reading history is, and particularly the 47 boom out of World War II with all that inflation, is supply comes on. We behave differently with excessive economic growth. What will be the nation's behavior given a 7% GDP?
I think that 7% GDP that's inherently going to be transitory is not going to have that big an effect, Tom. And I realize this is somewhat contrarian. We are, and this is, of course, what the Fed is betting on, which is that this is a one-time surge. The overshoot is not persistent, and the longer-term inflation expectations are not persistent. Now, my colleagues, Olivier Blanchard, Larry Summers, are emphasizing two things. First, that the inflation is going to be pretty high as a result of this. And second, that the Fed's ability to ride this out without raising rates and to raise rates without breaking a lot of stuff is limited. And I think that's where the debate is, not how much inflation we're going to get. The final point I would make, and this is my own point, is that the savings rate I expect to stabilize at a much higher rate than it was before the pandemic, just as the household savings rate stabilized at a higher rate after the global financial crisis. So we're going to see volatility over the next year and all this talk about pent-up savings, but it's not ultimately going to leave us spend, spend, spend.
Adam, that final point is really important because I think that final point and your view on that variable can be the difference between 5-6% GDP growth and maybe 7 and 8, and it can be the difference between inflation ripping higher and inflation, to your point, just being a 2% story. Adam, how do you come to that conclusion about where the savings are, how they'll be spent, and how they'll be drawn down?
Thank you for saying that, Jonathan. And my view is there's two components to this. I mean, there's still going to be a transitional dynamic, and there is pent-up demand in one key area of services, which is healthcare. And we're already starting to see that from the insurers. There was a lot of stuff that may or may not have been elected that was foregone during the worst of the pandemic. So I do expect a huge surge in healthcare spending. And that catch-up is going to be inflationary because that's up to 20% of the economy. But when we think about the savings rate, if you look at the history of major shocks, you look at the history of the 20s and 30s, you look at the history of the global financial crisis, what tends to happen in the US and a lot of other places is the savings rate shoots up, comes back down, there's some messy dynamics, but you plateau at a higher rate of savings. Think about young people we all know who twice in 10 years either have seen their opportunities go away or known people who had the bad luck to graduate high school or college in the wrong year. That kind of world, it scars you just as our grandparents became thrift-minded after the Depression. So I expect the household savings rate to be up 1.5%, like to 6% when it stabilizes after this crisis.
Fascinating. And Lisa, I've got to say, this is probably one of the key variables right now for your outlook, and I don't think it's been talked about enough.
Yeah, the idea of spending and how much of this $1.7 trillion of excess savings will be pumped into the economy. Adam, there's also a question of the frictions in getting people back into the labor market. There was recently a Project Syndicate essay talking about how a lot of jobs got eliminated much faster because of the pandemic, and these are the low-cost, low-skill jobs. What are you foreseeing? How much is the administration currently doing to ameliorate these frictions, to do training programs, to help it so that people, particularly on the lower end of the income spectrum, can get back into the workforce pretty quickly?
I think we got to separate two things. You're absolutely right to focus on this issue because this is what economists refer to as scarring, and this is the question both for inflation but also for human welfare. How much of the workforce can quickly come back to full employment if the Fed lets it rip? And I would say it's a mixed bag, to be perfectly honest. On the one hand, what we're seeing is labor force scarring in the U.S. actually isn't as bad as we think. Human scarring, like with children missing school or people missing medical care, is very real. But the ability of low-income people in the U.S., when given the opportunity to find work, is actually quite high. New research from Peterson, done by my colleagues Simeon Jankov and co-authors Eva Zhang, have been looking at entrepreneurship, and we've seen a surprising surge in entrepreneurship in the small business sector. There's more resilience there. That doesn't mean people shouldn't look after them, but there is more resilience there and less scarring. That said, when you look at what's in the American Rescue Package, or whatever it's called, the big package that just came from the Biden administration and Congress, most of it is short-term, and some of it is going to be about trying to extend the lifetime of jobs in restaurants, in hospitality, in airlines that may not be there for the long term. And so it goes kind of the other way. We still need more investment, a couple percent of GDP a year, frankly, in what the Europeans call active labor market policies, helping to match people and make them more mobile to get to new jobs.
Okay, but this is a really important point, Adam, because it seems to be that you're saying this is irregardless of the pandemic. This is regardless of the pandemic, irrespective of it. This is an important point, the idea here that the infrastructure plan cannot necessarily be billed as an extra stimulus to pull the economy out of the pandemic, but rather a shift in the economy and a way for the U.S. to win in a world that's evolving toward 5G and a different technology. Is that accurate in terms of what the U.S. ought to be doing with infrastructure?
Lisa, I think you're right that what we've got and what I'm trying to get across is the infrastructure writ broadly, and that means such things as heavy-duty just building bridges, that means shifting the green composition and the carbon intensity of our economy, and that means the human infrastructure of making the best use of our people. That infrastructure is a long-term issue, and that is something that requires sustained spending, things that people can count on, things that businesses can plan for, and that requires financing. That is not going to be paid for out of debt on an ongoing basis, even if in general we would like to pay with debt for high return projects. Because of the amount we've had to spend for the pandemic recovery, we've got to look at how to finance that over the long term. If we get back to a world where we're confident there's not going to be a recurrence of pandemics and we have a process in the Congress that actually works, then you can start talking about these are net positive investments, and so we can finance them over time.
Adam, that was a clinic, and we always enjoy your time, sir. It's great to catch up. Adam Poston there, the president of the Peterson Institute. This is what we're trying to do this morning. What's changed? A lot around central banking, just tons, and an unprecedented drawdown in this global economy. We now need to understand the recovery and how quickly things snap back, Tom. What changes and what doesn't?
Right. I want to give you, John, a snapshot here. Let's bring up this chart, John Fair. I want you to comment on it. This is the most important chart out there right now, and it's killing me. It's killing me to tell you that this is the pendulum of disinflation from Lisa Abramowitz. John, this is the 10-year versus the 5-year guess on inflation. It is unprecedented back 20 years, and it screams transitory. Lisa brought us to this, I don't know, 2 weeks ago. Zero Hedge featured it in their Fed coverage last night. And I'm sorry, John, Abramowitz has absolutely nailed the transitory chart of the moment.
Lisa's been on top of it for the last several weeks, and Lisa, I know what you think about this too.
It's killing me saying this.
This just echoes, and I think reflects perfectly the view of the Fed. So this whole story that this market is somehow pushing back against the Federal Reserve, there are certain places, including inflation expectations, Lisa, where things are very much in sync with what the Fed is looking for.
I guess that what I struggle with still is the path to that disinflation. Is it easy? Is it gradual? Do we have the big pop in inflation and then a gradual reset towards some sort of normal low inflation environment? Or is this a more violent reset where we have some of the zombie companies, where we have some of the frothy equity conditions that do come off? No, these are important questions because it has to do with your investment thesis over the long term. And frankly, it goes to this divide of HSBC versus Ray Dalio. When you talk about yields going to 1% on the 10-year by the end of the year, you talk about a new inflationary environment.
There's also a divide between the south side and the buy side, and a bit of book talking going on as well, Lisa. But
you don't
we'll talk about that another time too. Look, I think at the moment this is about forecasts, and we're all on the same page about what those numbers could look like in the next several months. Then it becomes about psychology. How do people react to those numbers when they actually come through, Tom? In March, later this month, in April next month, in May,
we're going to get those growth numbers, and they're going to change the conversation.
Yields up 8 basis points on 10s to 172. Equities down 14 points on the S&P 500, down 1/3%. From New York City this morning, good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden could meet with China's President Xi Jinping. That's if things work out at meetings in the next 2 days between U.S. and Chinese diplomats in Alaska. Bloomberg has learned that Beijing would like the summit to take place around Earth Day on April the 22nd. The idea is to show that the two leaders are focused on combating climate change. A Russian legislator demanding that President Biden apologize to Vladimir Putin for calling him a killer. The deputy speaker of Russia's upper house called the president's remark a watershed in relations and unacceptable in any circumstances. Meanwhile, Moscow has recalled its ambassador to the U.S. for consultations. And Americans who have put off filing their taxes are getting some more breathing room. The Internal Revenue Service is delaying the April 15th deadline to May the 17th. Last year's deadline also was delayed because of the pandemic. More fallout at Credit Suisse from the Greensill Capital scandal. The Swiss bank has ousted asset management head Eric Varvel, plus it's suspending bonuses for senior executives. Credit Suisse was forced to suspend funds it ran that invested in Greensill's notes when it became apparent it could no longer value them. The world's largest asset manager, BlackRock, has already made bold statements about climate change. Now it plans to press companies about their policies regarding human rights as well as biodiversity and deforestation. BlackRock says it may vote against corporate directors who fail to act on these issues. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Okay, ladies and gentlemen, I decided to move up stop on profit for Swissy, or Swiss franc. So if you already on this trade, and if you purchased as we suggested you to purchase at the level 0.9242, I'm going to move up stop on profit to 0.9252, just up here. It will give us 10 pips of profit. Each pip equals £100 for us. It depends how much broker pays you per pip if you trade in on margin. If you trade in as a Forex pair, there's different amount of profit you can get. So please do place stop on profit for Swiss franc. I'll speak to you later.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The debt load has just increased because of the pandemic. And in a country like the United States, if you're born in a poor family, it takes about 5 generations to get to the average income in your society. So clearly our societies are reproducing, not reducing inequality.
Strong words from Her Majesty Queen Rania Al Abdullah of Jordan. From New York City this morning, good morning. Alongside Tom Keane, Lisa Abramowitz, I'm Jonathan Ferro. Here's your bond market. This Thursday morning, we look like this on 10s, approaching 173. We've already seen 174 this morning, up almost 9 basis points now. A real breakout in the last couple of hours and a real breakdown in the equity market. On the S&P down a third, on the Nasdaq 100 down around about 1 full percentage point, off by 1.1% right now. Dollar strength, a story in the FX market for euro dollar 119.39. We've talked a lot about DM central banks. Bank of England coming up next. Look out for EM. Brazil with a big move. Yeah. Turkey in the next 20 minutes or so, Tom, could follow suit as well.
I really agree with that, John. EM's got some significant fragilities and oddities, I would say, right now versus the story we're all hearing tick by tick here in America, and as we see to the Bank of England here in a few days. Right now in the pandemic, Jason Farley briefs us from Johns Hopkins University. What I see, Jason, right now is an overconfidence. Let's call it an American exceptionalism. We have the best vaccines. We have the best program. We have the best statistics, and on and on. How do we avoid the sadness that we see in Europe?
Yes, certainly. Tom, I think your analysis is spot on. There's lots of hope and lots of optimism, and that's a good thing. But we know that behavior is driven by, trying to remove anything that prevents us from living our lives, right? And so what we're seeing right now is, the beach is full during spring break. We're seeing states reopen. all because of this wonderful hope of these great vaccines reduce cases in some states, but not all, and the opening up of the economy. Now, those all on the surface seem like an appropriate reaction when you have vaccine and when you have appropriate treatments, but yet we are seeing cases increase throughout the European Union. We are seeing cases, particularly Italy, going back on lockdown. We are seeing new variants pop up across the United States. It is certainly not the time to be rolling back precautions.
Well, just sticking with the U.S. for a second before heading back to Europe, there is a question, though, of whether the number of cases is the statistic to watch or the number of deaths, which has fallen off precipitously. And we've seen that as the vaccination rate continues to increase, particularly among the highest risk individuals. Is it okay for people to throw away some of the caution because the highest risk individuals are not going to pack the hospitals, and that was the real source of a lot of the social distancing measures that were put in place?
Yeah, I think it's a fair question, right? As we see deaths continue to fall, we definitely know that cases can continue despite vaccination, but they're extremely effective in preventing severe cases and death, and that is a very good sign. The problem at hand right now is that there's the haves and the have-nots. Many white affluent communities in the United States have had access to vaccine, while black and brown communities have often struggled to find access and not had access in their communities. So we will see an emerging, continued and enlarging disparity if states begin to open up, while the have communities who've received vaccine are protected and the have nots are then suffering from continued cases and then ultimately continued death.
All right, so what's the solution to that, Jason?
Well, the Biden administration is certainly getting more shots in arms. We've passed 2 million doses effectively each day for several days now. We're now past the 100 million dose targets that are set by the administration. Certainly, we need to have a pragmatic approach. So the local epi and the local jurisdictions. Now, I'm not talking about it at a state level. I'm talking about it in a population county by county or city by city level. Needs to really determine what its caseloads are, who's being impacted, where is vaccine, how is it being distributed, and really target communities where they're seeing increased amounts of hospitalization and deaths in those communities with greater amounts of vaccine, because that's where the virus is, that's where it's circulating, and we really need to start thinking about letting the local epidemiology drive our vaccination campaigns.
Okay, let's go there, because yesterday I was sort of shocked by an image. I'm going to give credit to CNN, Jason, of someone clearly under 20 years old, maybe 22 years old, getting the vaccine. Mississippi opens, Alaska opens, the Cherokee Nation can't figure out what to do with all the syringes they don't know what to do with because nobody wants the vaccine right now. What's the catalyst to get to your regional and local outcome?
Yes, certainly. So we are still battling a lot of vaccine hesitancy, as you know. Some places have surplus of vaccines. Other places are still, very, very long queues. So really trying to think about the redistribution of vaccine. If it's not being used locally, redistributing it to places that have very long queues would be one important strategy. Secondly, we've seen recent emergence of Facebook and other social media companies trying to get on the bandwagon with the risk communication and health communication messaging around the vaccine and trying to battle misinformation. We certainly need more of that across the world.
I don't mean to interrupt, Dr. Farley, but do we need corporations to take over vaccination? Is that efficacious?
Well, we certainly, when we think about large pharmacy chains, they've certainly been enrolling and participating in the vaccine administration, and they're doing a great job, although small volumes in each individual store. If you're talking about more on the corporate level, saying that our employees need to be vaccinated prior to returning to work and offering vaccine programs through individual employers, that potentially is a great strategy for the employed. It also helps to unpack, if you will, the health department's requirements for vaccination and citizenry. The problem is getting enough doses to put in the hands of various corporations would be the first hurdle that would have to be overcome. And then obviously corporations aren't typically sitting with mass vaccination personnel. So that's a second hurdle that would need to be overcome there.
Jason, just finally, a quick question from me, if I can, just squeeze it in. Do you think we have a sufficient acceptance issue right now? And if we do, why on earth aren't we aggressively widening the pool, the eligibility, to allow other people who actually want one to get in line?
Yeah, well, to go back to Tom's question about, the 20-year-old, getting a vaccine, I think it's really critical that we are not, standing in that line, placing judgment. We don't know the individual health circumstances, right? So they may fall. high-risk categories. And so I think it's really critical that we expand as appropriate in local jurisdictions. So if you're not seeing long queues of lines in patients demanding it in the phases that you're in your local jurisdiction, then expansion of those to additional populations is certainly the right way to go. We have to get the shots in the arms as fast as possible.
Jason, always great to catch up with you, sir. As always, Jason Farley there, Johns Hopkins nursing professor. Your daily average, just to bring you the numbers, because we haven't done that so far this morning, 2.47 million now doses per day in the last 7 days. Just great numbers, Tom. Terrific numbers. And I agree with the professor. We have to avoid putting guilt on those that are in the line to go and get the vaccine, Tom. It's so important because in the next couple of weeks, when we really aggressively open up eligibility, people should feel totally fine going and getting a vaccine. And I hated the fact that 12 months ago, people were guilt-tripped into not wearing a mask and then told to wear a mask. And are we going to do the same thing with vaccines? I hope not.
Well, it's a tentativeness, and clearly in Europe it's been chronicled more, and there is a tentativeness in America. Everybody's got, I got an opinion, you got an opinion.
Sure.
Here's the answer. Let's go. Let's go. Let's go.
From New York City this morning, good morning. Alongside Tom Keane, Lisa Abramowitz, I'm Jonathan Ferro. Coming up on this market, Tony Dwyer, Canaccord Genuity, with yields up 8 basis points to 172. And your equity market breaking down 12 points on the S&P 500, down about a third of 1% to 39.51. This is Bloomberg Surveillance.
Not only just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
grow very rapidly this year, 6+%. That's a challenge for the Fed to change its own forecast.
We're in the unusual situation where the central bank is trying to push up inflation expectations and push up inflation.
Its whole point is to get the economy growing faster.
It is interest rates. It's that chronic underperformance of value that we've had for years and years. That's starting to unwind.
There's been a somewhat manic depressive positioning story in the Treasury market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
174 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow, and there it is right now. 174 on 10s. Yields up, Tom. 9 basis points on a session.
Getting up the intraday chart right now, John. We are about ready to go through to new highs today. This started at 2:37 a.m. Let's say it started in Europe. John, it all links into a sea change, second move in yields off of what Chairman Powell wrote yesterday.
2's 10s approaching 160. The green light for this curve to go steeper, Tom. A Federal Reserve committed to sit on the front end and at the moment comfortable with what the long end is doing.
Yeah, I'm going to go back to the language early in the press conference where he said he is outcome-based. Outcome-based to me is wait and wait and wait. It is a massively ex-post Fed. And if you read your Alan Meltzer, if you read your Richard Timberlake, frankly, any frontline economist like Adam Posen, all that means they will wait to see the data.
We are no longer forecast-based, but Lisa, those forecasts are something else.
Yeah, 6.5% of a growth expectation, and really looking at full employment by the end of next year, and yet still no rate hikes. There is a question, though, here. At what point will they start to care about the pace of yields going up? Right now, they don't care because, frankly, it has not led to a material tightening in financial conditions, John, but everyone will be watching credit spreads and other signs of possible tightening.
Watching equities this morning, the S&P 500 lower, the NASDAQ too. But, Tom, let's just go there just quickly. In emerging markets, we're starting to see a move the other way. Yesterday, it was Brazil with a 75 basis point hike. This morning, it's Turkey with a 200 basis point move. And dollar lira is making a move lower. That's a stronger Turkish lira.
Into March and shaping up April. I mean, John, this is a sea change off the certitude of international investment X number of months ago. And there has been, we've seen this pause 6, 7, 8 weeks ago, and it continues where EM just is not participating.
Yep, there is some comfort in America at the Federal Reserve. There isn't that comfort over in Turkey, over in Brazil for that matter either. Let's get to the price action this morning. Good morning to you all. What a couple of days it's been in this market. This is how we shape up this morning. Let's just start from 25,000 feet. Take it to 30K. Yields up 9 basis points, 174 a little bit earlier, 173.30 on 10s right now. Equities lower, the S&P 500 down by 0.4%. And through much of this morning, Lisa, the NASDAQ 100 down in and around 1 full percentage point.
Continuing that pretty tight correlation between yields higher, NASDAQ lower, and we have seen that continue this morning. One thing I do want to highlight about yesterday, just real quick here, is this question that the Fed did not address about that bank capital relief. We are expecting to hear something from that. If they don't get that, perhaps that's adding to some of the pressure we're seeing today in Treasuries. Meanwhile, John, I am going to steal from you because it is a fantastic phrase. You're taking a look at Bank of England's 8 a.m. presser and rate decision, and you said it's Fed light, and that basically is what we are expecting them to say, that the increase in yields is a positive indication of expectations going forward, not indicate that they will take additional actions. That is what we're expecting in about an hour's time. Then 8:30 a.m., we're going to be getting those U.S. initial jobless claims to see whether or not we're seeing ongoing progress in the labor market. Noisy data, unclear, fraud, other issues that have really created some turbulence here, and yet nonetheless, the trend is clear. Things are getting better, albeit still very high with the expectation of 700,000 jobless claims. And then today, I am very interested to see what happens between the U.S. and China meetings. Biden still taking a hard line with China. Tony Blinken, Jake Sullivan heading over to Anchorage to meet with Chinese representatives. Curious to see what they are going to say with respect to 5G and tech initiatives in the United States to counter what we've seen in China, especially at a time of supply chain disruption, John.
Lisa, thank you. Kevin Cirilli on the program in around about 20 minutes' time. Lisa mentioned a number there that I think is really important not just to gloss over. 700,000 on initial jobless claims. Tom, we're 12 months into this mess, and we're still talking about this. And every single week we talk about it on a Thursday morning. I think we should carry on emphasizing it. 700K is a massive number to still be talking about.
Yes, and Chairman Powell, I thought, was articulate on yesterday. He got very high marks among the people we talked to over the general tone of the conference. John, what I would say, and it's a phrase from, 2 years ago, ago, it was the vogue. Tony Dwyer, John, said this phrase, I think, 4 times in one interview. I wanted to punch him. Data dependent. We are hugely data dependent now into the middle of this 2021.
It's a good job you're socially distanced because Tony joined us right now. You wanted to punch him.
Oh, he does. That's
Tony
amazing.
Dwyer joined us now. Canaccord Genuity equity strategist, wondering what on earth is going on. Tony, great to catch up. You know the question you'll get asked a million times. Yields right now 173. When does this become a bigger problem for broader financial conditions, Tony?
John and Tom, I would never punch you. I'd kiss you right on the forehead, buddy. So it is stunning to me that somehow we're surprised that the Fed has done exactly what they said they were going to do for the last 6 months. Literally, every time Powell is on TV, and most of his governors, including the vice chair, who said he wants inflation above 2% for a full year before they think about raising rates, somehow we're baffled by the fact that they didn't lie. Like, they haven't lied yet. They have been very clear in their messaging, and the market and people like me try to influence them before the meeting, and they do what they said they're going to do. So the question becomes, John, to answer your question directly, is Lisa hit it spot on. It's first time I've heard it in a while. It's not about the level of rates. Like, is it 1.74? Is it 1.5? Is it 1.25? The people keep saying whatever the level they quote unquote think it's going to be. It's what happens to financial conditions, because the real negative impact is when credit begins to shut down and money availability lessens. That is not the case today.
Tony, that's where I want to go. I mean, we've got a whole set of people like you that had the courage to be in this market from day one. Everybody's made alpha off of Dwyer at Canaccord Genuity. Your core raison d'etre is, if you don't see a recession, stay in the market. More than any other time I've ever seen, we are light years from a recession. No question about that. What do you presume for our viewers and listeners to be the information flow from corporations into the equity market as we go to the 4th of July?
It's going to be about massive earnings improvements, productivity enhancements, and reopening with the economy. So, Tom, you and I and John, and probably not Lisa, because she's younger than us, have been through a whole ton of cycles. Just think of the last 2 cycles. The last 2 cycles after the dot-com crash and subsequent credit-driven recession, and then, of course, the great financial crisis, you get this massive move off the low. Like a 50% or even higher. It's in the last 2, including this one, it was 70% move off the low. And then you go in 2004 and 2010, after that move, you go into a period of volatility based on what the market is doing with interest rates. I went back and I read my notes from 04 and 2010, and the first half of those 2 years were volatile. You had up 5%, down 5%. Ultimately, the gains came at the end of each of those years because, and it was 9% in 2004 and 14% in 2010, and it came because of earnings. It came because the interest rate volatility began to ebb and earnings began to surge.
And Tony, you've been right. And I will just say, I'm going to go home and tell my 12-year-old son that someone thought that I was not that old, and he will be very flattered. Or very impressed, I should say. There is a question, though, Tony, about not just the earnings, not just the fundamentals, but valuations. And Mike Darda, another equity bull who's gotten it absolutely right from MCAM Partners, put out a note and said the NASDAQ has a valuation problem. As yields go up, some of these relative valuations look less good. When do you start to care about that?
I've already cared about it. As you know, Lisa, people were looking at me like I had 10 heads last summer when I was overweight the cyclicals because of the excess liquidity, which fuels a synchronized global recovery. That's still in play. So we've not favored those mega cap, high multiple stocks, the stay-at-home stocks. We believe that this economic expansion, as Tom said earlier and indicated earlier, Lisa, we're early in the economic expansion. We're not late. We just came out of a recession. We're still officially in a recession, right? So when do you really want to get out of cyclical stocks and back into the big defensive names? Well, when you think you're going to go into a recession, and that literally is years away. Now, to be clear, that doesn't mean, like I said before, in the first half of this year, I think it's going to be marked by volatility. We're going to have up moves like we've had, and I also expect down moves like 5-10% corrections like we saw in the NASDAQ.
Well, Tony, just to jump in, forgive me, pulling back from equities wholesale, granted, that's one point, but pivoting back from the cyclicals and back into growth is a different one. When growth expectations peak, as they likely will in the next several months, we have to start thinking about what the Fed is looking at in 22 and 23 for GDP. 23, we're back to just north of 2%. That's a growth equity-friendly story, isn't it?
Well, we'll see. Right? I love the projection. We make multi-year projections. We have no idea what the interest rate outlook is going to be next year.
True.
So what 2023 looks like is going to depend on what are happening in the market rates, especially in corporate credit in 2021 and 2022. So I think I'm very careful to make these grand projections. Now, Dart is a good buddy of mine. He's one of the few people I really listen to because he's not just been right, but the way he looks at it is very interesting. And he's right. It's very hard to make a case absent expectations of another shutdown or significant slowdown in global economic activity that you're going to earn your way into some of these multiples. Doesn't make them bad companies, but you pulled forward a lot of those gains.
Tony, it's a rare quality to be both humble and outspoken simultaneously. Tony Dwyer, it's great to catch up. Canaccord Genuity, equity strategist. Then we have to finish where we started that conversation. It's on the forecast. This Fed is doing exactly what they told you they would do since the end of last summer. And what's interesting about these forecasts now is they could actually have a stabilizing effect through the next several months because they're already out there forecasting above 2% inflation and telling you what they won't do when inflation goes north of that level, Tom.
Well, John, we've done a lot on bonds recently, but the equity market, I think, has been underrepresented here. Gina Martin Adams pretty much on the same page as Anthony Dwyer. Watch the news come in. John, I just looked at my porportfolio.
How's
I'm down
doing?
24% on my Austrian piece from when I bought it in
Lever
December.
it up.
Duration
2000, you know, I wanted to lengthen my duration, and it's down.
Tom, honestly, if I was on the buy side, I'd invite you in every single month and just do the opposite thing.
Thank you. It's just been
There's
great.
value in that.
I
You do
went for
know that.
duration.
There's value in that.
I can't spell duration, but I went for it.
Bond yields up 9 basis points to 174. Your equity market heading lower. From New York City this morning, good morning. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. If talks between the US and China in Alaska go well the next 2 days, Beijing wants a meeting between President Biden and President Xi Jinping next month. Bloomberg has learned the Chinese would like the summit around Earth Day. That's on April the 22nd, to show both leaders want to fight climate change. And President Biden is close to his goal of delivering 100 million coronavirus vaccine shots in his first 100 days in office, and it could happen today, more than a month ahead of time. The U.S. has reached a pace of 2.5 million vaccinations per day. The House is set to vote today on 2 immigration bills that would provide a path to citizenship for millions of people living in the U.S. without legal status. The bills deal with farm workers and young undocumented immigrants known as dreamers. Democrats had hoped to offer up more ambitious legislation, but that's disappeared with the surge of migrants who have arrived on the southern border. In Myanmar, the military regime has piled more charges on ousted leader Aung San Suu Kyi. She's now been charged with violating an anti-corruption law and could face 15 years in prison. Suu Kyi hasn't had access to lawyers since the military coup, February the 1st. Google's planning major investments in the U.S. The company says it will spend more than $7 billion and create at least 10,000 full-time jobs here this year. More than 1 billion workers will be spent in Google's home state of California. There also will be data center expansions in several other states. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Fiscal policy overall will have really helped us to avoid much of the scarring that we were very, very concerned about at the beginning. And I think that's just the size and the speed with which Congress has delivered, you know, with the CARES Act and since then, is going to wind up very much accelerating the return to full employment. It's going to make a huge difference in people's lives, and it has already.
The Fed is staying the course. That was Fed Chair Jay Powell there from New York City this morning. Good morning.
Okay, guys, I'm going to put stop on profit for Bitcoin at 58,385. Okay, 58,385. I placed stop on profit. Okay, so if you decided to sell short Bitcoin, as you can see, we sold it a couple of hour and a half ago. It's time for you to place stop on profit at 58,385. Okay, and let's see what's going to happen next, where it will lead us. I'm wondering, will it close at this level or will it move lower? I'll speak to you later.
As they look at what they do with the Federal Reserve, understanding there can be exogenous shocks. One was wrought yesterday in politics as the President of the United States had words of the leader of Russia. Kevin Cirilli joins us now, our chief etiquette correspondent in Washington. Kevin, did you see this coming? Did you see President Biden's comments to Stephanopoulos coming?
I did not see it coming, and I'll be completely honest there. Look, I think that this was a marked escalation in the rhetoric that President Biden used to address Russia. And quite candidly, it comes at the most pressing week in so far in his administration on geopolitics, when the nation's top diplomat, Secretary of State Tony Blinken, is traveling on his first actual traveling trip as Secretary of State, meeting, for example, with counterparts in Japan, and then later we'll head to Alaska to meet with Beijing counterparts, whether it's Russia or China. This is an escalation in terms of the focus of the new foreign policy of this administration.
In your reporting, what will be the response? I mentioned Victoria Nuland and others at the White House, very experienced, assisting the president in messaging foreign policy. How will they respond to what was wrought yesterday?
Noted. Look, I think that as this moves forward, I was on Capitol Hill yesterday, and I spoke with Senator Kevin Cramer. And by the way, Senator Kevin Cramer is the only Republican who urged former President Trump to stay in the Paris Climate Accords. And he said to me something that really stayed with me, which was that on Russia as well as on China, it's becoming low-hanging fruit. I was struck by this. He said this not during the course of our interview, but still on the record. And he said, the issue of China in particular has become low-hanging fruit for Republicans and Democrats. And what does that mean? It means that they all agree on it. It means that there's not going to be a policy fight over it. And that is a marked difference from when I first started covering these topics back in the Obama years.
Yeah, low-hanging fruit perhaps in the approach, at least with respect to tone, but not necessarily policy. And I'm thinking,
on policy. Well, in terms of agreeing on the general tone. But what I want to go to specifically is some of the supply chain issues that we've seen and how you direct supply chains out of places like China, perhaps bring them either back home or redirect them to make them more stable, as a growing number of companies talk about it. And it's a global chip shortage and a global supply chain issue. How much is this feeding into some of these conversations with China and frankly beyond, and how much unity is there on that discussion? Bingo, that's where there's disagreement. But on rare earth minerals, right? I mean, North Dakota, let's stick with Senator Cramer for a second. North Dakota has a plethora of rare earth minerals. If you go out to John Garamendi's Napa Valley in California, he's a Democrat. There are also rare earth minerals there. But look, a lot of the rare earth minerals are on federal land or on national park ground. And so that's where you run into some butting of the political head, so to speak. Now, look, Australia has a lot of rare earth minerals, and so I think you could see some redirection there. But when Democrats are talking about raising the corporate tax rate or tweaking some environmental standards, from the Republican perspective, they would argue that that's a little bit too difficult and that that's going to drive away investment as well as the ability to have too much to clear regulatory hurdles that it takes too long to do that.
Kevin, just quickly, high-level diplomacy used to be well orchestrated. The outcome used to be predetermined, and that changed with President Donald Trump. As we go into these talks in Alaska and beyond, what is the outcome that you're expecting? What's the conversation that's taken place in D.C.? Have the diplomats already had the talks, or are we expecting something just as knee-jerk and reactionary to the impulsive ways that we saw with President Donald Trump this time around too?
Republicans would say that Trump was able to make the China issue front and center. Democrats would say that it was reckless and that the trade war ended up costing American farmers. I think what you're going to see this week in particular is a sizing up of the situation, reviewing the situation, an assessment of where things stand. And I think that's what Secretary Blinken and his team are going to be looking to do. I've mentioned the Olympics several times, but I think that becomes a political chip. I heard yesterday from one prominent lawmaker on Background who said that they ultimately do think that the U.S. will participate in the Olympics, but it's a bargaining chip in these ongoing continued talks.
It's something the Chinese Communist Party is clearly very sensitive to, Kevin, which is why they're choosing a date potentially to meet at a higher level in April around Global Earth Day, which is something they know means a lot to the Western press and Western society. Do you think they think that the West is naive? Is that the approach here? Do you sense any of that, Kevin?
Well, I mean, with respect to their sensitivities, I think that maybe they, I think that they understand that there's a recalibration that's occurring, especially in the post-pandemic world.
Kevin? Good to catch up. Kevin Cirilli down in Washington, D.C., our chief Washington correspondent, host of Sound On Bloomberg Radio, weekdays at 5 p.m. Eastern. If you're just tuning in, that's the politics, the foreign policy. Here's the bond market. Yields up 9 basis points to 174. 30s at 250, Tom. And your equity market down on the NASDAQ.
No, I'm not going to go there. I think the equity market down 1.2% on NASDAQ 100. Yeah, it's down, John, but with that yield move, I'd actually think it would be down even more.
Seen a big move already, though, haven't we, over the last month for big tech? It's been pretty brutal.
Yeah, I mean, we had a 33,000 print on Dow yesterday. You know, I get it, it's the banks and all that doing well. You mentioned Bank of America does well this morning.
Yeah, Bank of America up, JP Morgan up. Lisa, Romain will drop by in a couple of minutes' time to talk about this. Banks rallying, tech stocks down. How many times have we talked about that on any given morning over the last month?
Yeah, cyclicals keep going hard. I do wonder, though, about the Morgan Stanley call that around 170, 172, they start to see some appeal in duration again. And you wonder at what point that bid comes into the market, John.
We repriced those forecasts, 2 weeks ago?
Yeah.
Marking to market a little bit, and now we're there.
Well, John, do you think I should double up on the Austrian 2,117?
I think you should give us your investment advice, and then Lisa and I can go away and do something else.
Down 24%.
Instead of me giving you mine. How's that? Coming up, Brian Railing, Wells Fargo Investment Institute head of global fixed income strategy on a bond market with yields breaking out again. 174 on 10s. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio, and here's the price action. A sneak peek of the equity market. Remain will go through the movers in just a moment. Your S&P 500 down by 0.5%. The NASDAQ off by 1.24%. The outlook is brighter. Wow. Growth is less scarce, so you sell growth. And what also do you sell? The bond market. Switch up the board and let's whip through this bond market quickly. 2s, 10s, 30s, 174.19. Higher a session on a 10-year maturity today. Yields up by almost 10 basis points. Right now, 174 again. 251 pushing this now on a 30-year at 250.73 and up 9 basis points there. For the curve, the spread between 2s and 10s, the widest, the steepest we've seen going back to the summer of 2015. There is so much talk about credibility at the Federal Reserve. This is a developed market central bank. EM central banks, they are the central banks that are trying to buy credibility right now. Concerns about deficits, upside risk to inflation. They're responding to it. Switch up the board and finish on this. Brazil with a hike yesterday. Turkey with a monster hike this morning, 200 basis points. That yield, that interest rate, higher, higher, higher. And dollar lira stronger. Dollar lira with a move of about 1.95%. And Tom, this really underlines and emphasizes just the complexities in the global economy right now. We talked about that transatlantic spread in the previous hour. Got to talk about that DM-EM spread that's developing too. The Fed has the luxury to wait. It has the credibility. It can wait. EM central banks do not have that luxury right now. That's why you saw Brazil move yesterday, Turkey this morning, Russia decides tomorrow.
And foundationally, it's off the vaccine news. I mean, you can look at a global perspective. I think the FT does a great job on that, James Burns Murdoch. But the bottom line, John, is EM and particularly Brazil. When I look at the Brazil pandemic numbers, there's only one word. They're grim.
Well, let's finish on that. Yields up so far for the right reasons in America.
Correct.
Yields are higher because the outlook is brighter.
And
now,
moving this morning.
That can change. Financial conditions eventually can tighten, and maybe we can have a different conversation. This is not a judgment about the future. It's an observation about where we are. And where we are is a better outlook, a brighter outlook, and an outlook that the Fed in the last 24 hours has endorsed. This market for big tech looking ugly with your movers is Remain.
Yeah, that outlook really driving the market right now. And, of course, what the Fed is doing also driving the market. With Jay Powell basically keeping his foot on the short end of the curve, a lot of folks sort of reassessing some of those growth trades. Remember, most multiples looked pretty good when you had a yield that was a lot lower than where it used to be. But you wake up this morning and you're looking at 174 basis points on that 10-year yield. You're looking at a real yield that's finally starting to get yield, and people are looking at Tesla. They're looking at Alphabet. They're looking at Zoom, and they're looking at all those names, and they're saying, is this really where you want to be? You look at where some of the names are moving here this morning here. It is a lot of those financial stocks. And, of course, it is a lot of those energy names as well. You see this on the next board there. So it's names like, ConocoPhillips. You have your Bank of America's moving higher here on the day. And then you have those reopening trades moving here as well. The Carnival Corps of the world also getting bids here. Then that leads us to the question of, do you sort of play this as more of a macro story? Do you play it as more of a broader Fed story, or do you go for some of the individual names? You saw that last night. You had Williams-Sonoma come out with earnings. Comp sales were great, up 25% or so. That was about 5 or 6 percentage points above what the street was looking for. A similar story with 5 below. And you have AMC coming out saying that by the end of this week, they're going to have all but about 23 of their theaters in the U.S. reopen here. So a lot of investors now are gravitating to those types of names. This isn't really necessarily about multiples anymore. It's not even really necessarily about the fundamentals as much as it is really just about whether you can sort of find some semblance of value in the price, not necessarily in the earnings.
I'll go with that, Romain. But within a great bull market where the Dow prints 33,000, I believe it was right off the announcement by the Fed. In this great bull market, what we're doing is pricing in an economic boom, right?
That's what everyone's pricing in. You look at the Dow closing at a record high, and you look what was up there. It was your Boeings, it was your Caterpillars of the world. There was a similar story with the S&P 500 yesterday, also closing at a record high. And in the pre-market, those are the names that are getting bids here today. It's not, unfortunately, it's not, at least in the short term, it's not going to be those Apples of the world, no matter how many iPads they put out there. This is a fundamental story here.
Romain, I don't care. Farrell's not going to help me with my bracket. Would you help me with my bracket? I've gone with Gonzaga, Purdue. I had to do this to keep my job. But, am I off the mark, Gonzaga, Purdue?
Well, they'll both lose, but yeah, I mean, you can do that. I mean, it's always a good pick. I mean, they'll get far, but you'll lose in the end.
You know, no disrespect to Gonzaga,
No disrespect
but
to Gonzaga.
the only time I ever hear of Gonzaga is every 12 months in the month of March.
This is true.
The internal PR reached out to me yesterday here at Bloomberg and said, "Do you want to do your bracket?" And I said, "Are we talking about Gonzaga again? Where is Gonzaga?" And I know I'm going to get so much abuse over
The
this.
Zags are in
Where is it?
Washington State. This is a manufacturer. Romaine probably knows more about this than me. And they are basketball crazy, right, Romaine?
They are basketball crazy. You got to get up on it, John, here.
I'm sure. Oh, don't worry, Romaine. I'll get the abuse on Bloomberg.
It sounds like a kind of
Right
chase.
now.
We're the tots.
John, do your bracket knowing mine will be worse.
I usually get my producer Jamie to do my bracket, full disclosure.
Good.
He knows what he's talking about.
Good.
Romaine is going to catch up. Looking forward to the show later.
And I put the tots in my bracket as well.
I'm sure you did.
As a write-in as well. Right now, Brian Railing joins. He's with Wells Fargo. Thrilled he could be with us. And this is really to summarize what you do with price down and yield up. Brian, the hallmark of Wells Fargo, and a wonderful conversation with your colleague in crime, George Borey, is the reality of price down. How do you manage a bond exposure, a clipping of coupons with price down?
I think you got to be defensive still in this market because the trends are clear. But I mean, you got to take a step back. You got to think about your overall portfolio mix and bonds. Even though they've really gotten beat up recently, there's still that defensive component of your portfolio. So to completely avoid them would introduce a lot of volatility into a lot of clients' portfolios that maybe they can't tolerate. So,
Brian, I think we're all trying to understand whether this move can persist, whether it can endure, how durable it is at these levels. So let's go through some of the levels. The spread between bonds and treasuries, 200 basis points. The spread between 2s and 10s, 160. Your nominal yield on 10s, 175. On 30s right now, 251. Are you thinking about levels anymore, Brian? What levels are they? What numbers are they in your head right now?
Well, I think the trends can clearly persist. Nothing's really changed. The Fed didn't change anything. We've got all this stimulus. So I wouldn't get in front of what seems like a falling knife. But at some point, investors will come back and buy these yields because in the long run, they'll start to look relatively more attractive. But I think the level is somewhere above 2%, maybe around 2.25%. But there's no reason to stand in front of this one.
Brian, that usually starts simultaneously when it starts to hit risk more broadly, and that's when this move becomes self-limiting. For credit, we haven't seen that yet. It's been a duration story, which is why investment grades really underperformed. When do you start to see that broader competition for capital? What kind of levels, Brian?
Again, I think you're going to have to continue to see this move continue to play out. I would look for at least another 50 basis points or so to maybe start dabbling. But there's just no reason until something fundamentally changes or we get through some of this reopening, we get through some of this stimulus, we get kind of through the liquidity that the Fed's offering to the markets to try to pick a top here in yields.
Brian, to be defensive in fixed income, what does that mean when people are saying it is defensive to go into riskier bonds that have a higher spread of yield above treasuries?
Yeah, so we're being defensive in the sense that, we've pared back risk a little bit, pared back some spread. It's just not as attractive as it once was. It's not like we're negative on it, but we're a little bit more neutral. But I think really kind of duration positioning, a lot of folks think we should go super short here in a market like this, but I think that's risky as well because it's just essentially a cash proxy. So with the steeper yield curve, you get some roll down, you get a little bit more yield, intermediate term bonds, higher quality. It's defensive. It's not real sexy. You're not going to make a lot, but it will start to provide some returns that we haven't seen in a while over time. And also, again, it provides actually a counterbalance to equities, which we really like right now. But if we would get into one of those periods of risk off, you could actually see at this level yields fall a little bit and protect your portfolio a little bit.
Brian, this is a really important point. You said that you are reducing some of your allocation to riskier credit to spread product. We're talking about corporate bonds in particular on the riskier end. What is this a bet? What is this saying? Is this saying that you expect conditions, financial conditions to tighten on the heels of higher benchmark treasury yields, which is the key thing that we have not seen, giving the Fed the okay to keep going with their policies?
It's really just, we've kind of gone too far too fast, I think, from a spread perspective. Again, we're not going negative. We're just getting to a more neutral stance. I mean, we've had phenomenal returns in credit over the last 12 months, and this is just paring that back, taking some returns, saying, listen, the risk reward isn't what it used to be. If you really want to take risk in portfolios, it looks better on the equity side to us right now.
Brian, it's great to catch up, sir. Brian Redding there, Wells Fargo Investment Institute Head of Global Fixed Income Strategy. On the foreign policy side, we've spent the last couple of days discussing this developing spat between the leader of the United States, President Joe Biden, and the leader of Russia, Vladimir Putin. Mr. Putin, the president of Russia, responding to these comments, speaking right now, saying that the killer comments are very bad. That was the Kremlin earlier on. The president himself saying that I wish you good health. That's his message from the president of Russia to the president of the United States. He also goes on to say, it takes one to know one. We will work with the United States in areas where we're interested. The US will have to take us into account despite the insults. And Tom, the context is important here. The president of Russia is speaking in a video link with residents of Crimea. You can join the dots.
Well, you can join the dots as much as you want. In 2014, Russia taking back Crimea, with many other countries saying this is part of Ukraine. Hugely sensitive issue with all involved. Of course, the Russians go back to, I believe it's 1783-ish as well, when they took this over ancient centuries ago. John, this is emotional, and you're right. The key thing I see here, I mean, Putin, Russians have different genetic moral code from U.S. I have no idea what that means. I mean, John, I know that's you and me as well. But what I see here, John, seriously, is the context, as you mentioned, of speaking to Crimea. That's another shot at President Biden.
Absolutely. There's some thought that's gone into that. As these comments continue to come in, Russians have a different genetic and moral code from the United States. Much more on that still to come. We'll touch base with Dan Tannenbaum, Oliver Wyman partner and head of America's Anti-Financial Crime. Absolutely. What happens next? We have the insults. What does the policy look like? That's what we're interested in. Not the fun and games, not the comments, not the killer comments, the policy, not just the tone. We'll get to that in just a moment. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Here's your bond market. We had a little look at 175 on 10s. We're now at 174.54. And your equity market taking another leg lower on the S&P 500. We're now down 30. We're negative 0.75% at 39.33. From New York City this morning, heard on Bloomberg Radio, seen on Bloomberg Television, with yields higher and equities heading lower, much lower. This is Bloomberg.
With the First Word News, I'm Ruchika Gupta. A Russian legislator is demanding that President Biden apologize to Vladimir Putin for calling him a killer. The deputy speaker of Russia's upper house called the president's remark a watershed in relations and unacceptable in any circumstances. Meanwhile, Moscow has recalled its ambassador to the U.S. for consultations. President Biden could meet with China's President Xi Jinping next month. That's if things work out at meetings over the next 2 days between U.S. and Chinese diplomats in Alaska. Bloomberg has learned that Beijing would like the summit to take place around Earth Day on April the 22nd. The idea is to show that the two leaders are focused on combating climate change. Oil is on its longest run of declines in over a year. West Texas Intermediate fell for a fifth day in a row. That's concern that the demand recovery could stall after several European countries halted the rollout of AstraZeneca's vaccine. And more fallout at Credit Suisse from the Greensill Capital scandal. The Swiss bank has ousted asset management head Eric Varvel, plus it's suspending bonuses for senior executives. Credit Suisse was forced to suspend funds it ran that invested in Greensill's notes when it became apparent it could no longer value them. And the world's largest asset manager, BlackRock, has already made bold statements about climate change, and now it plans to press companies about their policies regarding human rights as well as biodiversity and deforestation. BlackRock says it may vote...
Okay, guys, I'm going to move further my stop on profit for Bitcoin. At the price I'm looking 58 to 10. It give us 0.5% of profit. So if you placed an order, let me see. Right now I have a price you can sell at 58,188. So we moved higher. So you'll be able to place your order. And let's see what's going to happen next. In our case, and in your case as well, we have 0.5% of profit from Bitcoin. Stay safe. Okay guys, position closed on Bitcoin. We earned 0.5%. So your broker is supposed to confirm as well that your position closed, and they already gave you a profit or told you how much you earned from this trade. It took us 1.5 hours. Yes, we sold short at 10 o'clock and we closed position at, what time is it right now? 11:47. So good trade, guys. Well done. If you want to get a strategy, you can get it from our website, company.co.uk, or from this streamer on the right line. You will see the strategy that you can get, and you will see what indicators, what we use in order to find the right price to place trade, and why we never place stop and loss. This is all explained on our strategy. I'll speak to you later.
Concerned by the backup in bond yields that we've seen. I think the bigger concern is really what happens down the road if the Federal Reserve is really too slow to tighten monetary policy. If the Fed's too slow to tighten monetary policy, then at some point they're going to have to catch up. And that catching up process could be not very pleasant for financial market participants.
The long and variable lags of monetary policy with Bill Dudley, the former New York Fed president, from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Eager to get to the bond market, so let's give you the picture of things right now. 10's approaching 175. We had a clean break at 175 a little bit earlier this morning. Your highs, 175.26. The here and now, 173.12. Yields up by, let's call it,